You've probably seen listings online that make it look easy. A $500,000 house in 2026? Sounds doable, right? You might think, I make enough, I just need a mortgage. But here's the truth. The math behind buying a house today is brutal, and it's about to hit hard. Most people have no idea what they're really signing up for until they're already in the middle of it. Let's start simple. Imagine a $500,000 house. That's $500,000. For some, that's just a number. For most people, it's a life-changing commitment. You can't just think about the sticker price. You have to think about the down payment, the monthly mortgage, property taxes, insurance, maintenance, and the hidden costs that never show up in the listings. Most banks will require at least a 20% down payment to avoid private mortgage insurance. That's $100,000 upfront. Think about that for a second. $100,000. For many Americans, that's more than a decade of savings. Even if you've been diligent, socking away $1,000 a month, it would take over 8 years just to reach that down payment. And that's if nothing unexpected comes up. Life rarely works that cleanly. Now, let's talk mortgage payments. A $500,000 home with a 30-year fixed mortgage at 6% interest. The rate many Americans are facing in 2026 means your principal and interest alone could be around $3,000 a month. Add in property taxes, which vary but could easily be $500 a month, plus homeowners insurance at $150, you're already over $3,600 per month. That doesn't include utilities, maintenance, or repairs. The real monthly cost could be $4,000 or more. Here's where it gets tricky. Conventional advice says your housing costs shouldn't exceed 30% of your gross income. That means to afford this house comfortably, you'd need to be making roughly $160,000 a year. That's before taxes, before student loans, before credit card payments, before saving for retirement or emergencies. In reality, very few households hit that number. The median household income in the US is around $70,000. You do the math. The majority of Americans are far below what would be considered affordable for a $500,000 home. And then there's the matter of lifestyle creep. When people make more money, they often spend more. That extra $1,000 a month doesn't magically disappear. It goes into new cars, dinners out, vacations, or streaming subscriptions. Even someone making $160,000 can find themselves stretched thin if they haven't built the discipline to manage money carefully. Owning a $500,000 home isn't just about qualifying for a mortgage. It's about sustaining the lifestyle that comes with it. Let's break it down further with an example. Take Sarah, a marketing manager in her early 30s. She's ambitious, makes $120,000 a year, and has been dreaming of buying a house for years. She finds a $500,000 listing in her city, pictures herself in a beautiful kitchen with sunlight streaming in, and starts calculating. She has $40,000 saved for a down payment, not enough to avoid private mortgage insurance, but close. She applies for a mortgage, and the bank says she qualifies for a $480,000 loan. Excited, she signs the papers. Then reality hits. Her monthly mortgage is $2,900. Add taxes and insurance, and she's at $3,600. She has $1,500 in student loan payments, $400 in car payments, $300 in credit cards. Suddenly, her take-home pay of roughly $7,500 a month doesn't feel like enough. Unexpected expenses crop up. Her water heater breaks. Her car needs new tires, medical bills. The dream home begins to feel like a financial burden rather than a milestone. And Sarah isn't alone. In 2026, the housing market is not what it used to be. Interest rates have crept higher, inflation has made living costs spike, and wage growth hasn't kept up with housing prices. Many people are shocked when they realize that a home that seemed within reach a few years ago is now effectively out of reach unless they make sacrifices. And by sacrifices, I mean cutting back on vacations, delaying retirement savings, or stretching every dollar to make ends meet. Here's another angle: savings for emergencies. Financial advisors recommend having 3 to 6 months of living expenses saved. For a household paying $4,000 a month on a home, that's $12,000 to $24,000 just sitting in an account for emergencies. That's before you even factor in repairs, new appliances, or yard work. So technically, even if you can afford the monthly payment, can you afford to live safely? Many homeowners find themselves living paycheck to paycheck without realizing it until something unexpected happens. Then there's the question of stability. Job changes, layoffs, or reductions in income can derail even a well-thought-out plan. The house doesn't stop demanding payments because your employment situation changes. One missed mortgage payment can start a domino effect that leads to late fees, a lower credit score, and in worse cases, foreclosure. That's the brutal math that most people ignore when dreaming about home ownership. Let's flip the perspective for a moment. Who can afford a $500,000 house in 2026? High-income households are the most obvious candidates. Professionals making $150,000 or more, dual-income families, or those with significant savings can manage the costs without too much stress. People who have invested wisely, built up cash reserves, or have substantial assets can absorb the ups and downs of home ownership. Even then, it's not automatic. Financial discipline is crucial. They have to budget carefully, keep lifestyle creep in check, and plan for emergencies. Another group that might manage this is households in lower-cost regions. $500,000 stretches further in cities with cheaper real estate. In smaller towns or certain suburbs, $500,000 might buy a large home, while in major metros, it might only cover a modest condo. So, location matters as much as income. Many Americans overestimate what they can get for $500,000 and end up disappointed when they realize the dream home is far beyond reach. Here's the tricky part. Student debt. In 2026, millions of Americans are still paying off student loans. Even moderate balances can reduce the amount lenders will allow you to borrow and strain your monthly budget. Someone making $120,000 a year with $30,000 in student loans might feel like a $500,000 house is possible, but when the numbers are stacked together, mortgage, taxes, insurance, debt payments, it becomes a tight squeeze. That's the math most people don't see until they run the numbers carefully. Then there's the factor of other long-term goals. Retirement savings, kids' education funds, and healthcare costs all compete for the same income. A $500,000 house isn't just a house. It's a long-term commitment that can affect everything else. Some people can technically make it work, but the trade-offs can be significant. They may delay retirement, skip travel, or cut back on family activities. This is why home ownership, especially at higher price points, isn't just a financial decision. It's a lifestyle choice. And let's not forget interest rates. In 2026, mortgage rates are higher than the ultra-low rates we saw in the early 2020s. A 1% increase in interest rates can add hundreds of dollars to your monthly payment. That's hundreds that could go to savings, investments, or simply improving quality of life. When rates rise, many households that thought they could afford a $500,000 house suddenly find it out of reach. One way to make it work is by increasing your down payment. But as we said earlier, $100,000 or more is required for 20% down. That's a huge barrier for most people. Some try lower down payments, but that comes with private mortgage insurance, higher monthly payments, and more risk. The affordable house quickly becomes an expensive gamble. Some people might try to stretch by taking on a 40-year mortgage, but that's a double-edged sword. Your monthly payments drop slightly, but you pay tens of thousands more in interest over the life of the loan, and psychologically, a longer mortgage can make people feel trapped. It's not freedom, it's a debt treadmill. So, what's the takeaway? The truth is, most Americans cannot afford a $500,000 house in 2026 without stretching themselves in ways that could be risky. The dream of home ownership is powerful, but reality is brutal. It requires careful planning, disciplined saving, and realistic expectations. You have to look at your income, your debts, your long-term goals, and be honest with yourself about what you can truly sustain. Yet, it's not hopeless. For those willing to plan, save aggressively, and live below their means, a $500,000 house can be attainable. Start early, focus on increasing your income, cut unnecessary expenses, and build a solid emergency fund. If you live in a lower cost area, you may find that the numbers work out more comfortably. There are paths, but they require discipline and foresight, not just dreaming. Many people overlook this part: mindset. Affording a house isn't just math, it's psychology. You need to be prepared for sacrifice and delay gratification. Treat your money like a tool, not a toy. Think in terms of long-term wealth, not instant gratification. That mindset separates those who can truly afford a $500,000 house from those who feel they can, but can't sustain it. Let's talk about options beyond traditional ownership. Renting, for some, makes more sense in 2026. It allows flexibility, less financial risk, and a chance to save aggressively. If your goal is long-term wealth, renting in a cheaper area while investing the difference can sometimes outpace the slow accumulation of equity in an expensive home. This is counterintuitive for many, but it's worth considering. For those determined to buy, there are creative solutions. House hacking, for instance, involves buying a multi-family property, living in one unit, and renting out the others to offset mortgage costs. Partnering with family members, finding down payment assistance programs, or considering slightly less expensive areas can make the dream feasible. It's not easy, but it's possible. Ultimately, a $500,000 house in 2026 is a serious financial commitment. It's a milestone, a dream, and a potential burden. The brutal truth is that it requires careful math, disciplined savings, and a realistic view of income and expenses. Only those who truly understand the full picture, mortgage, taxes, insurance, maintenance, unexpected costs, can afford it without risking financial strain. So ask yourself honestly, do you know your numbers? Do you know your income, your debts, and your real monthly expenses? Can you handle surprises without panic? If the answer is no, it might be time to step back, save more, or adjust your expectations. If the answer is yes, congratulations. You're in a position to make a smart, sustainable purchase. Owning a $500,000 house can be incredible. It can give you stability, pride, and a sense of achievement. But it's not for everyone, and the math doesn't lie. Approach it with clarity, discipline, and respect for the reality of today's market, and you'll be able to make a decision that benefits you long term. Remember, wealth isn't just about what you own, it's about what you can sustain. Make your choices wisely, and the house that seems out of reach today can become a stepping stone toward a more secure financial future. If you found this breakdown useful, make sure to take the time to calculate your real affordability and share this with friends who are dreaming about home ownership. The numbers don't lie, but knowing them gives you power.